The US indices just pulled off a big bullish move on Friday, but the real question is, was it a dead cat bounce or the start of a real rally? Today in Weekly Digest Part 2, we break down the S&P 500, Russell, Dow Jones, and Nasdaq from multiple angles to determine if this is just a temporary bounce or the beginning of a sustained uptrend. Special feature: Dow Jones Transportation, a key market indicator flashing signals. Are we seeing strengths under the surface or a major bull trap forming? What's your take? Are the markets gearing up for a bigger rally, or is another downturn just around the corner? Drop your thoughts in the comments. Big news! We just hit 6,000 subscribers this week. Huge thanks to all of you for the support. If you are new here, hit the subscribe button, like, and turn on notifications so you never miss a key market move. And don't forget, our website is packed with fresh weekly reports on indices, commodities, treasuries, and major stocks. Check it out for in-depth analysis. And now let's dive into the charts and find out what's next for the markets. And we start with Russell. This is the candle map for Russell, and it is quite concerning if we look especially at the bigger frames. While the daily formed a bullish engulfing or inside up candle, which is an equivalent, and it has very good chances to continue higher on Monday and maybe beyond. But the weekly, for example, they closed with a bearish candle, even though it's still sitting on the two major support lines, 100 weeks and 200 weeks moving averages. It's not quite clear what will be the next move. But if we look at the bigger frame, for example, the 10-day frame, which closed earlier this week for Russell, I would say it's a very, very strong bearish, and it moved below the very strong resistance point. And now all eyes turn on the quarterly frame. This is potential quarterly tower top if Russell moves a little lower. But in any case, it's going to be a bearish engulfing. So in order to avoid bearish engulfing, Russell needs to rally about 9.3%, or maybe even low, even higher. I would say about 9.8% in the remaining 11 trading days. That would be something. But nevertheless, we know the target and it's below what we will be looking for. That's the candle's perspective, and it's quite disappointing if you ask me. But now let's have a look at the charts. So this is our two small frame charts. This one we've been tracking since February 12th, and this was the original one that we posted and shared with our subscribers. So far, we are seeing that it's practically unchanged, and everything remains intact. I think that right now Russell completed wave 3 of 3 and had a good chance to make a little bounce here before resuming the move downward. That's on the short-term frame. And if we look at the slightly bigger perspective, again, this chart has been in effect since November, by the way. And we were saying that Russell was forming a top at that moment. And since November, it technically was moving down. And right now, we think that it's possible that it formed an impulse down, wave 2, and now is working on impulse number 3. Well, that's the possibility. Still there is an alternative path for red here, which has marked alternative 5, and in this case it would be forming a bigger ending diagonal. However, if it moves lower here and doesn't make a bounce right here right now, it means that this potential will be cancelled. Now let's move on to the next chart. It's a big one that we discussed already with our subscribers and our guests here. So this is the chart that we've been tracking since January 2020. Well, it's hard to believe, but it's 5 years. And this is This is how it looked in January, in February. This is chart from February 2020 when we said that this is going to be a big decline. We technically forecasted the big move down in March. And this is exactly where it happened. So that was the January 2nd, 2020 forecast, and we projected the move here. And as you know, it hit 966, and it was a very strong bearish move. So now this chart we discussed earlier in February, saying that now it's turned for moving lower, and technically the candles were supportive, and we had a strong bearish engulfing in February on a 2 months frame. So this is exactly what happened, and right now we are seeing it's declining, the price is declining, and it's already close to our first target, which could be either wave A of a bigger correction, A, B, C for wave 2, or wave 4, an A, B, C correction in the green count. So that's the perspective for now, and we will be looking when this impulse finishes. And the final one I would like to talk about Russell is this. So Russell, it looks like it is leading the entire bag of indices, and it's formed right now a monthly MACD bearish cross. And although it's not recorded yet, we still need to wait until March 31st to make it official, but the chances of it are fairly strong. And in order to reverse this cross, index need to rally about 5 to 6% approximately. However, it wouldn't make a big deal because in this you can see that the MACD line is leaning almost horizontally down, and if it's not happening this month, it's gonna happen next month. That's almost guaranteed. Now what we are looking for is for similar crosses. One was in January 2022, and another one in October 18th. And these are the most technically similar to the one that is happening right now. So I would say that the current move would be somewhat between these two that happened before. And what I would say that this one has slightly stronger from technical perspective, because for example, one of the reasons that the price is already losing the 50 months moving average, which didn't happen here and here. So if this is the case, I would say that it would be reasonable to expect at least the move here between 1800 and 1400. That would be our target for the next move if the month closes with this big bearish candle and we have a bearish MACD cross. Something to keep in mind that, and this would represent a loss of about 26 to 42% in the next couple of months or even couple of quarters, depending on the speed of decline. Now let's move on to the next index, and this is Dow Jones. So first of all, I would like to say that Dow Jones made a very strong move this week, and I would say that it is completed right now a double top by moving below the neckline and making this huge candle, which by the way closed below the 50 weeks moving average, which is significant technical event. So the next target for Dow Jones would be 38.9K, and let's measure it. So this is the so far move from the to the neckline, and from the neckline here it would be another 7%, and the total would be about 14%. This is something that we would be expecting. Well, however, considering the structure and considering the size of the top, it wouldn't be uncommon if, for example, Dow makes a double distance here. Well, but it's a bit too early to discuss this, and let's focus on the candles. Dow Jones closed Friday with a bullish inside up candle. However, it requires strong confirmation because this is not a reversal yet from the candle's perspective. If we see a strong move upward on Monday, Tuesday, and the shift in momentum, then we might consider starting discussing about a reversal. And one of our big focuses right now is the monthly closure. This is the perspective, and I would say this is the red line, and it is November low. Okay, let's put the number here. Lows 41,647.30. 41,647. 647.30. So this would be the level to watch. If Dow Jones Industrial Average Index closes in March below this level, it would officially confirm a long-term top. And not only for the monthly frame, but if we look at the 3-month frame, this would be also a very strong bearish engulfing on the quarterly frame, which will be a special case. Well, that's the perspective from the candles. Now we know what to watch for. If we look at the short-term chart, this looks like Dow has been working on an impulse down. We have wave 1, 2, potentially wave 3. Now this is the most typical target for wave 4, and if Dow Jones reverses here and moves down, forms wave 5, it would be a very significant impulse down, and we will discuss it once we see it happening. And after Dow Jones, I'm not showing the big chart, long-term chart. We discussed it today with our subscribers on the website investingangles.com, so you're free to visit it and have a look. Now the special feature of today is Dow Jones Transportation Index. What I'd like to first of all to say is that we are looking for potential reversal again. So this is a bullish Harami candle on the daily frame. However, I am not convinced that this is going to be reversed here. We had already 2 bullish candles here, one early in March and one late in February, and both of them were brutally declined. And so far the momentum is remaining bearish, pardon. So if we look at the weekly frame, the weekly closed with a very strong bearish candle, signaling a continued move lower. And if you notice, just in 2 weeks, Dow Jones Transportation lost 50, 100, and 200 weeks moving averages, which is quite unprecedented. The 10-day frame, which is closing not tomorrow, on Monday, right now it has a bearish candle, and it has a bearish 8x20 MA bearish cross. So this candle is so bearish, so in order to reverse it, or let's say to mitigate it, Dow Jones Transportation needs to rally about 7% just to mitigate it. In order to reverse it into a bullish one, it needs 10% in 1 day. Well, I would say that this is impossible. And now let's have a look at the chart. This is one of our beautiful charts that we've been sharing with our subscribers. And this was, let me show you the original one. This was made back in November 14th when we said Dow Jones Transportation is about to make a top, a big one and a serious one. And it will be followed by a 35% loss or something like this. So this chart remains intact. This remains intact, and then we reinforced it in February saying that, okay, so this was the first wave down, and now we have a gentleman's exit. Please use it. Well, those who listened, I hope they didn't disappoint it. And this is what is happening right now. We are seeing wave 1, 2, potentially wave 3 is being developed. And Dow Jones Transportation already lost 15, almost 16% after our call, and almost 17% of the top. And I would like to say that this chart is not the only one that we share. So if I show you this one, you might be surprised, but this is technically the same chart. The same shape, the same structure, the wave structure. The only difference is that this is Tesla. And we flagged this chart. We've been talking about it in late months of 2024, and this chart was shared in January 11. So you know what happened with Tesla. Let me show you the chart, which is I took today. So this is what it is. So Tesla precisely hit our target, 240 to 140, and right now everyone thinks that this is the bottom. Well, we have several concerns about this possibility. But this is about Tesla, and we will be talking about it in our weekly report on investingangles.com. So that's what the special feature of today. And now let's move into the next index, S&P 500. This is the chart that we've been tracking since January 11th, when we said that that's the top. And the chances for moving lower are significant. So we consider still two potential paths here. First is the green one, which is right now the primary. Wave 1, 2, 3, 4, and 5. For this one, S&P 500 needs to reverse somewhere here in this rectangle, ideally. Although it could move a little lower. And it closed on Friday. It hit the low of last week. It was 504, which is 15 points higher than our targets. So technically the target could be complete. We'll see whether we have follow up or not. But I would like to say that if S&P 500 breaks this line 48.1862, then it would be most likely a purple path, because it would invalidate the index 1, 2, 3, 4, 5 here in green, and the purple path would be open. That's the perspective from the long term, and we are tracking it on daily basis. Now let's have a look at the small chart, which we've discussed for a while. So far it is not changed significantly. The only thing that right now we would be looking for wave 4 for this particular wave. It can go higher, slightly higher, but it's not necessary. So if we see an immediate move down, it would be also normal. And so that's the chart. And this is the middle term chart, what we are seeing here, and we discussed it way earlier. Now what is the perspective is that this chart, wave 1, 2, 3, 4, 5, could potentially be an ending diagonal. Non-overlapping, but nevertheless, so the waves are not entirely impulsive, so they could be also the corrective waves. And our target is 51.20. So far it's been moving towards this target. Now let's have a look at the candles. This is the most interesting thing, I believe, in this part. So we have a bullish candle, but well, we already had 1, 2, 3. This is number 4, and all of them were negated so far. Well, this has a slightly better chance because the index has been oversold, and we might see a slightly higher bounce. But For index, it would need to break 200 days moving average and 8 days moving average in order to start the rally. From the weekly closure perspective, this is a very bearish, and as you can see, the price broke through the 50 weeks moving average while making the 8 by 20 EMA bearish cross. The 10-day frame, which is closing on Monday, it has a very similar conditions to what we just discussed for Dow Jones. In order to mitigate this one, S&P would need to make a very strong move. I would say approximately, well, at least 3%. At least 3% in order to make this candle somewhat neutral bullish. I'm not talking about bullish because it's just impossible. And the monthly closure, we have two levels right now. If S&P closes below the January low, it would be bearish. If it closes below the November low, it would be strong bearish. So there are two possibilities here. Well, if it pulls higher, we might see some different structures and we would need to reevaluate them. But so far, looks like we are on track for a bearish closure. So this is another perspective, and these are 4 indices. What I'm seeing right now, this is S&P 500. I took SPY, Nasdaq, futures, Dow Jones Industrial Average, and Russell. What we are seeing here is monthly frame, and only Russell right now is on track for MACD bearish cross. We already discussed it earlier. So Nasdaq, it looks like it's going to be the second one if it makes just a little lower. Well, S&P 500 and Dow Jones are still thinking, but I have little doubt that they're gonna close this either in March or in April. That would be somewhat normal. Considering the magnitude of these crosses, it's very significant. That's just another data point. Now let's have a look at the 10-day MACD cross that we have been tracking for a while, and now we have a fresh 10-day candle on the futures, and it's strong bearish, and the cross is right now gaining speed downward. So it looks like it's gonna be accelerating. Let's see what happens next week, but so far it's bearish, and now we are clearly in this position for the red, for this particular cross that I circled red one. So if now we have a look at the sectors that we typically do, what we are seeing here that almost all of them formed bullish candles with a good chances to continue higher on Monday. However, I would like to show the weekly closure as well. So this brings a totally different perspective. If we look at healthcare, for example, XLV, and consumer discretionary, or energy, or utility, or particularly consumer staples and industrials, we are seeing that these candles are technically bearish. And this XLK technology sector, it's formed an inverted hammer, and in this case it could be a reversal candle. However, I would say that its lower shadow is somewhat small in order to make a big turn here. Let's see how it goes. I think that most typical would be to see a move here towards the 50 weeks moving average and rejection and a move down. Let me visualize it. So this would be the path I'm thinking about. Something like this. And let me change the color so you can clearly see it. Yeah, so this would be, oh, let me write it again. So this would be the potential path. Something like this. Well, however, we need to see how it works so far. And I would like to emphasize that XLK technology is fighting right now the three black crows on the weekly frame, which is very rare. And if you watched our videos from previous week where we discussed XLK, the technology sector, in details, you would understand what I mean and what kind of implications this might bring. So that's the perspective from the sectors. So sectors are somewhat bullish for the Monday and Tuesday for 2 days, but the weekly is looking bearish and we need to be prepared for that. Now let's have a look at Nasdaq, the final of 4 indices. So what we are seeing here is, I would like to emphasize this one, the 3 black crows that Nasdaq formed last week, and we said this is gonna make a big difference. By the way, these 3 black crows were the first ever event of that magnitude and that technical strength that Nasdaq did ever. And now we are seeing another candle, which is technically a bearish candle, and especially with the loss of 50 weeks moving average, the chances for moving lower are fairly significant. Even though we might see a bullish daily closure and potential additional bounce on Monday, Tuesday, I'm not sure it's going to be sustainable. Considering everything else, the odds are strong bearish on the mid and long term. And this candle, this is futures. This is the 10-day frame. What I'm seeing here is like almost 2 identical candles. And if Nasdaq in the next 10 days forms another one, that would be probably the first time ever for an index of that importance. So I would like to emphasize this one. So this is something we'll be watching for. And Nasdaq monthly so far looks bearish. And if we look at the quarterly frame, quarterly so far is also shooting for a bearish engulfing. Let's see how it completes. So far the perspectives are rather gloomy. Now let's have a look at Nasdaq another frame, something that we discussed earlier with our members. So this is the second largest, this is the largest cross ever on the 15-day frame, and it was completed last week. So what we are seeing here is the potential move down, and just a very ballpark estimate. If Nasdaq follows the path and the statistics are right, then we should be expecting Nasdaq hitting about 13K, maybe in a couple of years. But it could be much faster, depending on what kind of wave and what kind of technical indicators we're gonna see. So far, this is a very concerning indicator. Now let's have a look at the chart. So this is Nasdaq midterm frame. What we're seeing is potentially an impulse being formed right now, while Nasdaq still has a chance to form an ending diagonal for wave 5 here in the green rectangle, 1, 2, 3, 4, 5. Well, that's a very low probability at the moment, and especially it will be negated completely if Nasdaq moves below this level, 18,339.75. That would be a point of no return for Nasdaq, and we would be open to these targets and perhaps even lower, 13K, as I discussed just in the previous chart. That's the perspective for sure for midterm. And now let's have a look at the short-term frame, which has the most clear, I would say, impulse right now, and the most clear wave upward that Nasdaq is forming among the other major indices. So far, I'm seeing this perspective. Nasdaq might form an ABC wave here. This would be an ABC. And this is the most typical, most probable targets, sometime somewhere between 19,815 and 20,000. That's the most typical one. If it overshoots a little bit and goes to 20.2, 0.3, it's absolutely normal. And if this happens and then Nasdaq resumes the right downward and makes wave 5, it would be a very strong impulse downward. And I would say that this would be something like 16-17% of decline. And this index would be only wave A. This index would be only wave of a bigger correction. That's all I wanted to say today. As you can see, markets are at a critical crossroads. Friday's rally was impressive, but will it hold? The S&P 500, Nasdaq, Russell, and Dow Jones all made key moves. Now the focus shifts to follow through and confirmation. Dow Jones Transportation is signaling something big, and it is likely bearish. What do you think? Will this rally continue into next week, or was it just a temporary bounce before another drop? Comment below and let's discuss. If you missed part 1, we covered volatility, the dollar, bonds, oil, and natural gas. Be sure to catch up on that episode for a full market picture. We'll include the link in this video. Help us reach 10,000 subscribers. 10,000 subscribers. If you found value in this breakdown, smash that like button, subscribe, and turn on notifications so you're always ahead of the market. For even deeper analysis, visit our website. Tons of weekly reports, Elliott Wave insights, and exclusive charts are waiting for you. As always, stay sharp, trade smart, and happy trading.